Hello everybody, welcome to my new trade recap. We are at AUDCAD on the weekly chart. This was a missed trade of me because I will explain later. What we saw on the weekly chart was we had here a possible shoulder one head, then we had the break of this last higher low. So this was our higher low, higher high. We had the break of that with a very impulsive weekly bearish candle close, and then we touched this with the next candle. This was a shoulder one head, then the shoulder two was kicked. So we touched the weekly zone of interest, and then we went back to the downside with a weekly bearish candle close. So we could look on the daily for more downside momentum. So what I saw was, so on the daily we were making here this low high. We broke this previous higher low here. So we are bearish. So what could we possibly have? We have that shoulder one here, this head, shoulder two, and then we did that within that a pattern within a pattern, the bearish W. So I drew my Fibonacci from the high here to the low because our head and shoulders wasn't aligning in our 61.80. As you can see, 61.80 was here, so that's why I drew the Fibonacci lower. And then I saw another pattern. I saw the same lows, so we expect also the same highs. So I didn't took it because we didn't touch the, if I do it like this, we didn't touch the 61.80 of the daily bearish W fib. So that's why I didn't took it, because I had a call previous week with Kevin, and he said that if we don't touch the 61.80, it has a lower chance. So I I wrote in my trading plan that if we don't touch the 61.80, that it's invalid. But yeah, it's just a lower chance if we don't tap that daily zone of interest. So if we don't tap it, it's a lower chance of succeeding the trade. But it was already a very nice trade that was aligning with that weekly selling zone here, with that multiple patterns, this bearish W, these head and shoulders with us. So it was a good trade to take, actually. So that was a mistake of me that I changed in my trading plan. So the daily natural W was same lows. We expect same highs. Daily white zone has already been drew. So I went to the 4 hour, and what we saw on the 4 hour, we came back, we touched the daily zone of interest, and then we had our first candle, second candle. And then we had here an tap of this previous structure. This was just a momentum retest, so I didn't saw it back then. I thought, okay, we touched this previous structure here, so that's why I wasn't in that trade. But this was just a momentum retest, and then we had the second candle was closing red, so this is a must for us for deceleration, for a bearish, for a short. So then we had our first candle, second candle, third candle, and from the third candle close, I could set my limit on the decel box there, and then I was tapped in, and then we went straight to the beginning of correction, and then I would take some partials out, a lot of them actually, maybe all of them, because it was already 3.9. So yeah, it was already 3.9%. So this could be a 3.9% trade if you take this. Then the trades I had taken out was on my demo account. So if I go on the weekly, because it was one of my last days of the FTMO, and I didn't want it to make impulsive decisions in these days, because I was around the break-even point, plus 0.3%, I think. So I wanted to do the repeat. So that's why I took these trades on my demo. So if I go now EURCAD, so this was the trade I took on demo on the weekly. What you saw was here just big sellers kicking in. This was all possible deceleration or a possible shoulder one here, head, shoulder two. It's not that obvious to see. It's not that clear. So we had here just our low high, and we broke it. So we are bearish. We made that very impulsive weekly bearish candle close. And if I look on the monthly, you can see we had here a monthly supply and demand zone acting as resistance. Here, resistance again, resistance, support, support, resistance, resistance. So that's nice. We had already some monthly bearish candle close, so this was nice to see. So if I go back to the weekly, we had that weekly bearish impulsive candle close. We could look for on the daily for more downside momentum. So if I go on the daily now, what you can see on the daily is we had our bigger pattern here. We had our first leg, second leg, third leg. So I was seeing this as a big pattern because our third leg is just a flat wall. So I wanted to see a retrace candle, but our daily zone was aligning within the 61.80. So this was our first structure. So the 61.80 was aligning here. And then we could draw our zone to the first point of structure here. And this was my first point of structure. We touched it on the 61.80, and then I went till the 4 hour. And on the 4 hour, what did we receive? We received the head and shoulders with break, shoulder 1, head, and then the shoulder 2. So we had here the break of this higher low. We had the break. We could look for that shoulder 1, head, shoulder 2. We could place our limit on the shoulder 1, just one pip to the downside. I took the round number to the downside. And then my trade was active on my demo. And then, yeah, we were running around 0.23%. And then we went on -1%. So this was a loss for me, followed by the plan. So no error that I made. So then the next trade, GBPUSD, this is also one I took on demo. So if I go on the weekly chart, you can see that we are bullish on the weekly. This was our low, high, lower high, higher low, higher high, higher low, higher high. So we are bullish. So we had here also the same highs on the weekly. So we expect the same lows as a natural M, like this, same highs, same lows. Then we can go to the upside. We had also a weekly supply and demand. So if I look further back, this was all support, then here some support again, support. And then, yeah, it was just a big support region. If I go on the monthly now, it was also a big buying zone, support here, support. So it's a big buying zone. So this is what we needed to pay attention on. It was not a clear supply demand zone, but a clear support zone with that weekly bullish candle close at these weekly lows, which were very big buyers kicking in from. So that's why I was looking for a bullish setup. So if I go to the daily now, what I saw on the daily was we are still in the bearish driver of the daily back then, because we had here that high, low, lower high, lower low. So everything between this high and low is just a correction for possible more downside momentum. So we had that daily bearish impulsive move to the downside, but we had the weekly bullish candle close, and I can take a pattern against the daily driver if I don't touch this IC or that previous high. So we didn't touch that. So I could look for that daily beginning of correction trade, because we had that bullish M here sitting at this weekly buying zone. So we could look for a trade on a beginning of correction, possible fake out on the beginning of correction. So I took my fib from the whole structure, from the low here to the high from the whole structure, because this is a pattern against our daily driver. So I can take the fib from the whole structure. So that's why I drew my daily zone of interest at this daily beginning of correction with that fake out that was here already giving us a trade. So then I drew also my black line, horizontal line at this wick, at the lowest wick here for the possible fake out. So then I went till the 4 hour. And what I saw in the 4 hour, the price was coming back. We didn't have here a trade. Then we went further back to the downside. And then we had here our first candle, second candle, already a blue candle. So then the third was kicking in here, closing here. So then I could take my limit after this third candle close, then the round number to the upside from the diesel box, then stop loss wide enough. And then, yeah, we had just touched our stop loss, and then we went back to the upside. So it was a trade followed by the plan. So nothing to shame of. So this was my trade recap of this week. So have a great trading week, everybody, and see you next week. Bye.